Welcome to the 2 Levels Up channel. My name is AC, and today we'll be doing the Ftse 100 Index weekly review. As always, guys, the information on this channel is for educational purposes only. Under no circumstances should the information outlaid before you be deemed, interpreted, or acted upon as financial or investing recommendations. By watching our videos, it means you fully accept plus understand our terms and conditions. You're also agreeing to the fact that you're fully capable of making your own sound and critical analysis of the information provided. I hope you're having a good day, guys. Alright, we've had 2 good weeks so far, beginning of April. So hopefully everybody's been making good money. Well, whether you're in cryptocurrencies, whether you're in stocks, everybody should be making money. If you're not making money, it's not a problem. It just means there's things we need to look at and things we need to work at. Okay, as usual, we start with the Ftse 100 daily chart. And this is where we are today. This is where we finished Friday. And as you can see, I'm trying to take this back to October 29th, 2020. You can see the different price levels we reached, where we are, and where we'll be going. I don't know. All I know right now, when I say that I don't know, you know the market can do what it wants, when it wants. What I know here is we're basically above the 2007 highs, and we're trapped in between the 2007 highs and the 2015 highs, if you watch my previous video. Anyway, there's a lot here to look at and for you to get your teeth into. Okay, there's levels here we need to look at which are important, and I always start where the market turns, right? There, right? These are important levels. These are your horizontal, resistance, and support lines. Okay, these are static. I mean, they don't move. Right? And you can create trending lines, downtrends, uptrends, channels, all that. Those will move, and those are adaptive to the market, right? As we can look at the price chart starting from Tuesday, we got Monday. This is how we started Monday, where they pull back. The market, this is a 24-hour market, futures market, right? The market closed for the whole 24 hours at minus 14.5 points. The following day, Tuesday, we had another negative day, and we closed at 25.5 points down. But the reverse action which took place on Wednesday allowed us to gain a minus 25.5 plus close 10 points above. So therefore the reverse action is a 35-point move. We needed volume. As you can see, on Wednesday, volume enters the market. The volume pushes to break the highs set on the 8th of April. Alright? And we're going to try and take out this high set on the 7th of Jan. So, even though, like I said in my last video, we had a good first quarter of the year, but look at the price action. Look at the price action. And we're just above, we're just sitting above the high of the year. The next few weeks and that, it's going to be interesting. But anyway, as you can see right here, we've had 2 good weeks. Okay, going back to the 5th of April, the first day of the month. We've had a good run up from 6770 to 722. 7022. Okay, we're going to drop the chart down to the 4-hour chart. Okay, this is how I do my work every day, guys. This is how it's done. I'll always look at the daily first, then I'll look at the 4-hour chart, then I'll drop it down to the hour chart, And if I'm actually live trading in the daytime, goes further, so I'll go down to the 15-minute chart. Okay, here we get a full price action for the 1st of April, and you can see this lovely run up. The market hits resistance there, and we get some profit taking, and it pulls back. This is where we are Monday, like I said, Monday 8 o'clock, and this is where we are Tuesday. And for the reverse action of this, we see this lovely push up to get back above the 2007's high. This, what you see is a 75-day simple moving average. I always put that there. My main concern is not on the bigger time frame, like a 4-hour frame or hour frame or a daily frame. I'm more interested, I use this mostly on the hour chart, and that's where we're going to go, and that's where we're going to go a deeper analysis of this thing. But the principles, what I'm doing in the hour chart is exactly the same as on the 4-hour chart, and it'll be exactly the same on the daily, weekly, monthly, 15-minute chart. It doesn't matter. The principle is the same, the mechanics are the same. Here is the hour chart. This is where I prefer to use the 75-day simple moving average, because it basically encompasses 3 days of action on a 24-hour market, which I use as a signaling, not as a technical indicator to enter the trade. I'm just using it to see at a quick glance to let me know quickly, well, the market is above or the market is below the last 3 days price action. So therefore, my bias should be to the bullish side or the downside, right? Anyway, so let's go into the price action, right? The first thing I always do is put horizontal support and resistance lines. Okay, so that's the first thing I'll always do every time. It doesn't matter which chart I'm using. It doesn't matter what market I'm using. I will always do that, guys. So I'm trying to find areas where the market turned, areas where the market met a lot of resistance or a lot of support, and the bulls or the bears gained full control of the market, and the market pushed up. Okay. I'm trying to frame the market from different areas or different zones to see how we progressed up or progressed down, or we went sideways in the trading or lateral movement. Okay, so let's go. So we'll go some more. This is a whole week, obviously, but if you're going to do this daily, you start on the nearest day or bar or week, whatever chart you're on. That's where you start from. Okay. When you frame the market like this, you start to see it more like a 3D formation on how the prices moved and how the prices reacted to each one of these levels. Okay. The next line I'll do is separate the days. Sometimes it becomes difficult how you separate it to look. So I'm trying to separate the days. Because like I said, this is a 24-hour market. So here you go, 12 o'clock, duplicate, and I'll go 12 o'clock. So this is Monday the 12th of April. Right? If we was on Monday and this is all we had on Monday, and this never happened yet, you are now able to see what's going on, right? So we know the market had a run up for Friday to create this high at 6941.6. From then in the morning, that's the Tokyo session into the European session, the market has soared off and found resistance at 6853.0. And we know
that the market was supported at these levels because you can see the volume entering at 8 o'clock in the morning, European session, and at 10 o'clock 9 o'clock in the morning, European session. You can see the level of the volume down here. That's buyers not selling, entering the market or supporting the market, because they don't want this market going any further down. The market reverses and tries to pull back and push up and rally, but it meets resistance. And again, look at this horizontal line, like I said. Look at the play area here and look at the play area here. Right? These are the things I'm looking at, guys. I'm not trying to make things difficult for me. I'm not trying to create rocket science, nothing like that. See how we're going to do it. Come on. Okay. Here we go. We've got that area. So let's duplicate that. And look here. This is what I'm talking about, guys. This is what I'm looking at. Okay. 1, 2. The market then goes sideways into the US market and into the night due to the action here and the fact that this is what I said, the 75 moving average to me is like a sat nav. A sat nav will tell you a way to get from A to B. It will always try to give you the fastest way to get to A to B, but with any route there's always alternative on how you're going to get to your destination. So this is telling us that, look, even though the market is rallied and it's trying to go up, the chances of it actually going above there are slim. It is more likely that it will stay below due to the price action here, because it favors a high probability of either retesting the lows or testing this support line again. If you was going to enter this market and you thought the market was bullish, I would be very, very skeptical of doing that based on the price action here. Just look at these bars. These are not bars where you get excited and you think, oh yeah, we're going long. There's no momentum. It's like the buying just disappeared, it just evaporated out of the market. The sellers are not interested, the buyers are not really interested, right? But I said the most important is this horizontal line. See that line there, we've got action there, we've got action here. Now, when the market comes Tuesday, again, the market you see, it pulls back and just falls slowly towards, look at this horizontal line, guys. Okay, so the market will set these zones for you itself. Okay, let's duplicate that, guys, and look here. Okay, and again, always look at the volume signature as it comes to test. Okay, test these levels. It is not the break or the test that's important. It's the action behind it. The action behind it does not tell me we've got momentum and we've got power behind it that we're going to break this line. When it does this at 12 o'clock in the afternoon on a Tuesday, okay, a test or this support line and it's failed, then reverses and closes here, okay, this tells me that the market is now ready to push up and go higher. We get confirmation at 4 o'clock, and this happens a lot, guys. At 4 o'clock you tend to get a lot of volume at 4 o'clock, and you tend to get the most volume at 8 o'clock, sometimes at 12 o'clock, but these are the most common days where you get a lot of volume in the UK or European markets. Now, if this volume here was selling, guys, okay, if this volume here was guys deciding to get out of the market because they presume something bad is going to happen the next day, it wouldn't have closed where it was. It wouldn't have been where it was, guys. Okay, so there's your first signal. If you wanted to buy this, that was your day to get in, basically, on that day, and holding it through the night session. And look at the night session and look at the night activities, guys. It's not a market that's willing to go down and it's refusing. Okay, look at these levels again. Yeah, we're running with this horizontal line. Look at it, 69503. Okay, the market tries to rally up, and you can see now the curvature of the moving average is curving down. It's going to curve down, it's going to swoosh up as it goes up, because now guess what, the momentum is turning, the buying power is getting bigger and dominating the market in comparison to the selling. And here we go again, guys. I said you get a large volume at 8 o'clock. We get a large volume, the largest volume through all this night session. The largest is 4 o'clock yesterday. And what they use this for is a shakeout situation where they want to stop anybody who's put their losses tight. Right there. If you put your stops right there, you're getting stopped out basically. Okay? So that's why sometimes you have to respect the market and give it a little bit more room to work itself. If you took this as your buy signal, you should have kept your stop here, because your first stop should have been down here, and you should have just moved it slightly here. If you want to be more aggressive, you could have put your stop right there on those levels, 6874.4. Okay, but you cannot bring your stop this tight, because you will get taken out. Okay, once this hour bar is completed, you see the next 9 o'clock bar. Now we're breaking this level, and you see the increase in volume, and you see the bars are getting bigger. When we break this level, guys, let's get that, duplicate and bring it here, guys. Okay, we break those levels. Now we're pushing. Now guess what, guys, like I said, I start with horizontal support levels and resistance levels. Guess what, right immediately in front of us we got another zone which we need to go through, guys. And this zone is what's been created again on Friday 12 p.m. and that zone is the 6941.3, guys. And look at the run up, look at the run up in volume there, guys. Okay, let's get a drawing, point to point. Yeah, look at the run up in volume, guys. Okay, that's an increase, a huge increase in volume. We're trying to go through this. Okay, but guess what, guys, like I said before, it is again same as before, 4 p.m. UK time, when the largest volume is in there. Okay, the volume touches that resistance line, but look at the closeness, the close of it. Right, it's really near the top. You get a pull back, because now the market is closed and the orders have been squared up for the day, so you will get a natural pullback. Okay, this little pullback is nothing to be worried about. This allows you now to move your stops from here, if you had it here, or if you had it here, now you move your stops to here. If you want to be aggressive, guys, if you want to be aggressive, you could have gone for this level, the 6907.8. That's where you're going to put your stop, around there. This pullback in the night session, okay, then the curvature and the increase in momentum overnight, and the break. Again, look, guys, the break happens at 7 o'clock this time, and it expands at 8 o'clock. The break of this level, guys, tells you we've lifted off. So this little curvature here of price action was just a pausing of the market, because obviously, like I said, the markets are closed in Europe. Okay, Europe and America are the biggest markets. When they're closed, the market goes slow. It just goes slow, guys. You have to give it. You have to be patient. You have to give it time, right? The curvature of the 75 moving average. Look at the curvature as well. It's turned, guys. It's turned right there. And now we're pushing. We're going higher and higher, right? And again, let's copy and duplicate these, guys. We're here, guys. 1, 2. The ease of the breakage of this level, 6939.4, tells me there's no more sellers, there's nobody here willing to short this market. And the ease of movement, as you can see, these big bars allows you to see what is going on. This line, the 69.84.1, it goes back to last week. I would have to go back trying to find that level. But you can see where the price has gone up at 9 o'clock and created, met resistance and pulled back. Then the price tries to go back. 1, 2, 3, 4 hours or 4 bars go by before it can retest this level. But you can understand and see that it's encountering resistance at these levels, or there's a lot of profit taking at that level. As the price pushes, now we're into Thursday, right? Let's go. I like putting my my vertical lines. Just makes my life a lot easier when I look at this, so I can frame it day by day. Just make things a lot more easier to look, you know, and get a quick glance or quick understanding of what I'm looking at. Okay, so here we go, guys. We're in Thursday and we've broken through that level. We've broken through the 7,000 level. There's always problems when we come around the 7,000 level. You can look back all this chart from the history. Every time we hit big numbers, we'll always get a pause, and we always get a lot of profit taking, because there's been a lot of people that have been trapped when the market's been down. So now they see this as their opportunity to get out, either a break even or a slight profit or a slight loss. The market goes to the 7,000 level, pulls back, but look at the time we're hitting this. 4 o'clock European market. Then the next few hours, it just drifts slowly, grinding to little bars, enough to frustrate you guys, just drive you crazy. If you try to trade this in the after European market sessions, it will drive you crazy. That's why if I'm in at that time and I'm active in the market, I'll rather trade the S&P 500, guys, because I know there's volume there. The American market is live and active, so it's better to go there instead of wasting your time and your money trying to trade this after 5 o'clock. The spreads are bigger anyway, so it's just crazy sometimes. You just do your head in. So leave it alone after 5 o'clock and go and do the S&P 500 or the Nasdaq, something else. Just leave it alone. Friday, we're into Friday, and as you know, like I've always said, Friday are always the most hardest days to trade, I think. Because if I've been in the market from here, guys, or even if I got in from here, right, I've got a good, healthy amount of profit. When I enter Friday, I'm very, what's the best word? I'm very hesitant to take a lot of positions on, or to add more to my positions. I'm either scaling out or I'm closing out my trades, because I don't want to be sitting in a situation where I give back all this hard work, I give back all this good profit on the last day of the week, then spend my weekend, guys, upset as hell, thinking, why did I do that? Why did I do that? You think, what did I do that for? Anyway, like I said, we enter Friday with a pullback, and the price pulls back to just sitting above the 7,000 level. And again, guys, it's the volume, man. The volume is always telling you. I know this is not true, but take volume anyway, that IG index are giving us. But anyway, it's the closest thing we got anyway. So again, 4 o'clock, you see the high volume. We come into here, 8 o'clock, we see the high volume. The price pumps and breaks these high levels, goes higher than probably any bar we've had in the last few weeks, and try and probably breaking the high of January 2021, I think. I'll have to go back to the daily to confirm that for you guys, but we go to the highest we've been this year. This area we're in now, like I've said in my previous video, is between the 2007 highs and the 2015 highs. As you can see the volume there, guys, we've got high volume. The volume dips, okay, to allow those who want to get in to get in, to allow those who want to get out to get out, okay. Then it pumps up to the largest volume we've had all week, guys. All week. Yeah? To go higher than, to get this 737.1. But then you see the next volume dries up. So this is telling me, look, the buyers are not interested, man. Nobody's committing themselves into this, man. Okay? Well, again, it's because we're going to the weekend. Nobody is willing to be fully committed into this. Okay? If you've been doing this all day, I'll suggest by it comes to 12 o'clock, just close your computer, guys, and go away, man. Yeah, go do something else. Go go ride a bike. I don't know what you want to do, mate. Go to the gym. Do something, yeah? Because look what happens. This is what happens over the next few hours. Yeah? I live traded this on Friday. I made a bit of money on it, but I just gave up. I put in one trade, made some money out of it, and I gave up. Right? And I just walked away. Right? Finished the day in profit. I just walked away, guys. I thought, you know what? I know what's going to happen today. It's going to be a slow day. It's going to be dragging day. So I'll rather go spend my hours and energy doing something else. Right? But you can, it's a beautiful day in terms of the price action. As you see, it pushes up. Let's get some drawings in there. Okay. It pushes up. Alright, you see that upward movement. We see the same upward movement in the volume signature at the bottom. Alright, we see that. Okay, so that's at 12 o'clock, right? And you see that the volume pulls, that the price pulls back, but the volume is increasing though. Yeah, and that is all profit taking, guys. That's what I'm trying to explain to you. People are taking profits. The buyers, okay, are absorbing all the selling, right? So remember, guys, and you should know this anyway. Anybody who's been doing this a long time, you know this anyway. For you to exit, if you've been short in the market, for you to exit, you have to press a buy. If you've been long, for you to exit, you have to press sell. So this is what's happening here. It's an absorption area. Everybody who wants to get out, they're getting out. Those who want to stay in, they're staying in, and they're absorbing all the selling, because the buyers and everybody else, or the bulls, believe the market is going to go higher. I think the market is going to go higher, and I believe the market is going to go higher. How high, nobody knows, right? So this is how, guys, I'm doing this every day, guys. I'm not gonna sit here and tell you like I'm the best, blah blah blah. No, I'm not. Do I make mistakes? Yes, of course I do. That's part of trading, guys. Nothing's perfect. Remember, again, trading is an art and not a science. Okay, let's go. Got too far. Okay, there we go. All right. So, in terms of volume, where we start Monday. Okay, we got that level there. Let's create a line going across. Okay, so we got one day here, 6 o'clock Monday. Tuesday it failed to produce volume higher than that until Wednesday, 4 o'clock. Okay. Thursday, 4 o'clock. Once again, about these volume signatures. Friday, the rush of everybody trying to get in and out, or those who want to get in or square up their positions. Look at the volume, guys. We've got 2 large bars on Friday. That's all profit taking, guys. Right? Let's see how this volume signature at the bottom interacts with the market, with the price bars at the top. And for this, I like, again, to pick the extreme levels or the extreme points. Yeah. So all I do is go like that, guys. I'm not doing something new. I'm not creating anything new. I'm not creating the wheel, guys. I'm just doing simple things. I'm just trying to frame the market day by day and to see what is going on, and trying to get my understanding around it, my head around it, what is going on. Okay. We keep going. Where we go? We go another here, level here, and look, it goes down there. Okay, so you see that pullback there? It's almost like a flat lining pullback. So it's not something to scare you. It's not something to make you think, oh, you know what, the market is going to collapse on me. No, it tells you straight away by this line here. It's telling you straight away that basically they're not really interested, guys. They're not really interested. Like I said, I'm just framing this market bar by bar, or range by range, or move by move, whatever you want to call it. It makes no difference. Okay, as long as we're making money, you can call it whatever you want to call it, right? Okay, guys, look. Let's go, let's go, let's go. Okay, remember, this is why I prefer, my personal preference is to have horizontal support and resistance line. Because when it comes to trend lines, trend channels, because they're very subjective to the person who's actually doing the drawing, right? And one person might say, I'll put this point to that point, blah blah blah. Well, another person will disagree with it. Okay, all I'm trying to do is say, look, their buying went up that way. That was the largest wave of buying we've had. The second up wave, the down wave, up wave, okay, down wave, up wave. Okay, this is what I'm trying to create here when I put these points on. It's not perfect, but it doesn't matter. It allows me to create a 3D roadmap on how I'm taking the position, how I'm going to trade the position. Because, like I said, everything you see in terms of trading is subjective. Okay, it's all subjective. It is how you view it and how you see it. Okay, but it makes no difference to me, guys. What's most important is that you're making money, right? Okay. Down wave. Push up. You can put there if you wanted to. No, let's see. Let's not start at the right place. Okay, you can go here. Start there. You can put it there. You can go up there. You see, when it goes in a really narrow range situation or lateral movement, you get a lot of this pumping up, pumping down, and basically it's just designed to tire you out. It wants to get tired. It wants to get to the point where you're frustrated and you just say, you know what, I'll throw a towel in, I've given up. And because I've given up, guys, then you get out. When you get out, then the market starts moving, and you start kicking yourself, thinking, why did I get out, guys? I was in there. That's what's happening all the time. Okay. And this is all I'm doing, guys, every day. It makes no difference what market or what am I doing? It's the wrong one. Let's delete that. I don't want that. It makes no difference, guys, what market I'm in. What time frame I'm using. Okay, makes no difference, guys. Okay, so if you've been watching my videos, you know when you see my videos that 10 minutes long and you think, oh, how did you do all this, why did you do that? Well, this is how I'm doing it, guys. I'm showing you how I'm doing it. Okay, here, where do we place it? That's what I'm saying. You see that? Do I place it there? Do I place it there? Do I place it there? Yeah, it makes no difference to me because I can put it there. Okay. Okay. That's how I'll create that, guys. Okay. As you can see, the price action in this zone here is box bound, range bound, and there's nothing. It's flat. That's not something to worry you, guys. Okay. The biggest selling happened on Monday. The second selling, or the longest selling, but not the biggest selling in terms of loss or points lost, points lost, was entering to Tuesday from Friday night, entering to Tuesday. Okay. The reverse pulls back. Okay, you get a pullback, a buying wave. You see the action here, guys. Okay. The best up wave was this one and this one, guys. Okay, then the buying is tiring out. Okay, but they're not willing to give up yet, and you get the final pump to the top. Okay, so with that in mind, guys, we need to see what's going on. So again, look where that market turned. Look at my volume, guys. All right, where the market turned. Look at my volume, guys. Where it reversed. Look at the volume, guys. Yeah, where it went up and met huge selling and resistance. Look at the volume, guys. Right? Same. Okay, you get nothing on there because obviously, like I said, it's a tick volume, which I'm not responsible. The tick volume is IG index, so this is what they're offering, right? And it's overnight action, so sometimes you get nothing, you get zeros, and you think, why you got zero volume? But well, that's what they want to put. That's what they want to put. Yeah, it's a proxy. It's not real volume. It's a proxy, as far as I'm concerned, right? Here we go. Again, where it turns, and look, here we go, where we reverse. Yeah, this is where I'm putting these zigzag lines. All right. So, according from our analysis, you can see, guys. Okay, the market is up. We might get pulled back on Monday to test the 7,000 levels again, and we might get pushed up. Okay, but keep these lines in mind, guys. Yeah, and it's exactly the same, guys. Monday come along, I'll delete all of these guys on Monday and start again, because I want a fresh perspective on Monday of what happened in the Tokyo sessions, in the overnight section, how it interacted with the nearest support and resistance levels. Then I go from there, right? I'm trading day by day, 1 day, 2 day, 3 day, 4 day, 5 days, and I'm framing the price action into a rectangular box. I'm trying to get an understanding what's happening and where we will potentially go. When I frame it like this, it tells me their limits, well, not the limits, because you can't put a limit on the market, but you know what I mean, the maximum and minimums where I'm gonna find this market to go. Okay, right? And you just take it day by day, bar by bar, guys. Have a good weekend, guys, and I appreciate you watching our channel and supporting our channel. Thank you very much.